What's going on, y'all? This Plainly Bitcoin back with another video. Here to educate you guys on Bitcoin, proving, letting you guys know that Bitcoin is the future. This article is going to explain how Bitcoin is holding 60K, why it's important. You know, Bitcoin's fighting inflation. Bitcoin's the new system, y'all. I'm trying to educate you guys, bring a different perspective. You're not going to hear about this on the media. They don't want you to know stuff like this. So you got to come find sources like me to educate you guys, to let you guys know that this is the future. You have to invest in the future. Why would you invest in the past? Let's go get into this article, y'all. Bitcoin is holding 60K. Here's why it's important. Resilient U.S. job and inflation data and steady spot Bitcoin ETF inflows aid Bitcoin's rally above 60,000. Bitcoin gained 4% between the 21st and the 22nd despite losing some momentum. It has sustained the 60,000 support. Some analysts argue that a break above 62,000 resistance is necessary to confirm a bullish trend. However, given the market's confidence in the U.S. Federal Reserve implementing expansionary measures, the odds still favor the Bitcoin bulls. Bitcoin's fundamental and spot ETF flows remain solid. Bitcoin analyst and investor Decode believes that Bitcoin's price must break above the 200-day moving average, especially at the monthly close, to resume the bull trend. However, Decode adds that Bitcoin seems to have lost momentum for now, so August, September looks most likely a continuation of the boring zone, but I am bullish on Q4 and ready to be surprised. In essence, investors remain bullish for the medium term, but do not foresee an immediate catalyst to close the gap between Bitcoin and traditional markets. Investors anticipate that the Federal Open Market Committee will cut interest rates at the next meeting scheduled to conclude on September 18th. Some economists believe there is potential for a 0.50 rate cut, which would be considered aggressive and typically favor risk-on markets like Bitcoin. Such a cut would lower the compensation for fixed income investments like treasuries and reduce the cost of capital for companies. Even a 0.25 rate cut would signal to the markets that the severe phase of monetary tightening is behind us. For years, we've been having these high interest rates. They did it to bring inflation down, but they could only do it for so long. So when they raise the interest rates, people go into cash and people cash out on stuff. So that's why investments, the market's really been down. They really haven't been down, but they're not going up like they've been over like the past 10 years. But they're still doing good. And some people are actually saying that, oh, I heard that the US reported a million jobs like earlier this year or last year. They reported that there was a million new jobs, but all of a sudden they're rekindling on that. They're like, no, actually those million jobs that we told you guys about, that wasn't a real thing. We messed up with that, which makes sense because that's the reason why that stocks and Bitcoin is still up like this, because people are factoring in that we are kind of in a recession. They just not telling us, but things could be a lot better. And when these rate cuts are finally about to start coming down after being up for a certain amount of years, past 2 years, they've been up. I don't know where they're at, but they're high. But now they're finally about to cut. Starting next month, they're about to cut. So prices are about to rip, y'all. That's what they're saying. All right, let's get back to the Some traders might note that the S&P 500 is trading just 1% below its all-time high, and even gold, often considered the world's most reliable store of value, reached its highest ever mark on August 20th. In contrast, Bitcoin remains 16% below its June 2024 historical high of $71,000. This discrepancy partly stems from differing risk perceptions. Stocks offer a cushion through dividends and strong balance sheets, while gold is viewed as a hedge. And Bitcoin is still considered like a risk asset. That's why it's not doing as good as gold or stocks, because it's still in that risky category, quote unquote. But it is because it's new. It hasn't proved itself, which they're about to explain here. Meanwhile, Bitcoin continues to struggle establish, to establish itself as an uncorrelated asset that serves multiple purposes. For example, global global gold ETFs hold 246 billion in assets under management, according to gold.org, while spot Bitcoin instruments include ETFs and ETNs total 66 billion, according to CoinShares. Despite Bitcoin's intrinsic properties of censorship resistance and a fixed monetary policy, it still has a long way to go to solidify its presence in traditional financial markets. This disparity in risk perception explains why gold's rise to 2,500 was not mirrored in Bitcoin's performance. While investors are certainly concerned about the U.S. government's fiscal debt and are seeking protection in scarce assets, most are not yet ready to fully embrace an independent digital currency. However, recent inflows into spot Bitcoin ETFs suggest a promising path forward. These instruments, my bad, captured 226 million in net inflows during the 4 trading days ending October 21st, indicating growth interest once initial barriers are overcome. Bitcoin could benefit from a constructive regulatory approach. In addition to macroeconomic trends, the cryptocurrency industry is seeing a more favorable outlook as the U.S. presidential elections in November approach. Candidates have strong incentives to publicly support the digital finance industry, regardless of their actual intentions. An August 21st Bloomberg report indicated that the Democratic presidential nominee Kamala Harris has reportedly pledged to support the continued growth of the cryptocurrency industry. Ultimately, as long as U.S. employment and inflation data remains neutral to positive, the likelihood of a less stringent monetary policy from the Fed increases. This could help reduce government spending on debt repayment, but it may also weaken the domestic currency as investors seek better fixed income opportunities elsewhere. Consequently, Bitcoin's prospects for breaking above 62,000 before year end remain solid. That's what I was telling you guys in another video. Bitcoin holding 60,000 is legit. It's cool. It's a good sign. Because really, like, these are supposed to be like bad. These are really supposed to be bad times right now. Bitcoin is really not supposed to be at this price. But it is because the ETFs, but also because people know what's really going on. Like, you can't, like, the cat's out of the bag. People know. People know. These governments moves. They know that all they have to do is all their only weapon is to print more money. I'm saying, do you guys do research? Like y'all think this inflation thing is a joke. This inflation ain't no joke. This is serious. Don't get left behind, y'all. Hit that like button, hit that subscribe button. Please leave a comment. Trying to grow this channel. Trying to get this out to as many people as possible. That's gonna do it for this video, y'all. Thanks for listening. And I'll see you on the next one.